Welcome back to Freedom Algo. So I am going to show you some of the trading setups today. Today was kind of an interesting day so far. It's basically a big range, and it is October 29th, 2024. So you can look here at the 2000 tick chart. This is the overnight over here. And so we kind of have this big range where basically we had this channel that was grinding down. It was kind of a couple of tight channels that turned into a wider channel down. Few trade setups this morning off of that. Then we had the push to a new low to fill a previous gap that I put on the chart here. This is a gap that came from over here that we were trying to fill yesterday, never quite happened. After that, we had a reversal into a wider up channel that then led to an overshoot of the up channel off of the top of the range. So it's kind of like a failed breakout and an overshoot at the same time. Pulled back down into a tight channel, came back down into this tighter channel, and then it started to grind up, and we haven't really been able to get back inside the original trend channel. You can kind of see we tried to get back up into that channel and failed off of it, so it kind of became a resistance later on. And now we're just kind of grinding up, and it looks like we are trying to possibly get outside of this range again, but it looks like it's failing here. So you can kind of see right here, we're sort of finding resistance near these highs. If I draw a line there, you'll see that that's basically a 1, 2, 3 triple test. It looks like this is actually a first entry, second entry short, but can't really take that with that bullish bar anyway. But it does look like a triple test here, and this now could reject back into the range and start going lower. We're looking for possibly a new low on the micro channel, but hard to say. It's kind of sideways right now. It's slowing down quite a bit. So I'm already done trading for the day anyway. So let's go into the trades, take a look, and wrap it up here. So let's see. So basically this is the tight channel. Then I had it as this channel, but really it was a wider channel that was drawn here. And if you look at this right here, this is at about 443. So I came in somewhere around, I think it was like on this candle maybe. Yeah, that's 511. So I came in somewhere in here. And basically what you have is right here at almost 530, you have this push up, pull back first entry, push up, and then below this bar would be a second entry short. The reason it's green is because you don't get it on the next candle, which could signify consolidation. So even though this candle right here is very bearish, and it almost plays a little bit like a lower high, it's not a perfect setup because it's starting to look sideways. It is off the top of the channel, so it is looking like a good second entry short opportunity. But you can see what happens. You do get the trade, and it would have worked, but you would have been sitting sideways in it for a while until after this candle. So you actually would have been sitting in this trade if you took it for over 20 minutes waiting for this to actually finally work out. And it does work out, but that can happen in the overnight. So that's why I marked it green. The better trade is the lower high, which is this one, because you get this first entry short, second entry short, that then pulls back, comes outside of the trend channel and gives you a lower high. And at this point, you're going to expect that it's going to make a new low. So that ends up being the trade that works out. And that one ends up working out way faster because you basically get in and get out. So that one is a nice trade, all below the EMA. It ends up actually going up and going sideways a little bit more. So after this break, you end up getting a couple of legs of correction. It's almost like a micro range here. You could have drawn, while this was happening, you could have drawn a kind of a tight range, something like that, basically, more or less. Might be a little lower, something like that. There's kind of a range in there that you end up working in. You don't really get many trades off of it. I guess you could argue that there's a possible long here if you saw this as a range, but I wouldn't have necessarily been looking for longs there, and it's not really bullish enough. So anyway, that's what I saw. It then breaks into this channel, tight channel working down. You don't really get a trade entry here, unfortunately. When it comes down, you do get a first entry long, pullback, second entry long, failure. So I do like this short right here. It's a pretty big bar. It's a 14 tick bar. So you're going to have a 16 tick stop loss on that because you're going to enter 1 tick below the signal bar and have your stop 1 tick above. So you're going to have a 16 tick stop loss on this trade. So that is a little bit aggressive, but it is after the open, and you are expecting a new low. The low here was 58.3850, and this low was, so yeah, so you basically, even if it double bottomed at the low, you would have gotten filled anyway, so that on 4 ticks. So it ends up being a pretty reasonable setup to take. And again, it's a first entry pullback, second entry failure. So you're expecting a failure there because you have this down channel and you need a new low. So I do like it. Some people might argue for that to be green because it's a failure. You don't have another leg up. Sometimes when it breaks out, you get a second leg and then it makes the new low or something. So, it's hard to say there. But for me, I'm thinking we're probably going to make the low. And it's also rejecting this close area. So I like that one. It then comes down and it sort of gives you this little bit of consolidation and then this bullish reversal candle. Now, I like this trade here. But this is a little bit more risky. You're expecting a reversal to happen around this area and at least probably come back, test that close or something. The reason that this is green though is because you have a doji next to it. It's kind of sideways. If this thing broke even lower and then gave you a really aggressive candle, that'd be a little different. But it still did break lower. It does look like rejection. But it's green, it's consolidation next to it, so after you get into it, you'd be sitting sideways. It almost comes down to stop you out before it goes in your favor. I was really hoping that we would get a higher low here, that after this candle, we would come down, maybe tap this level, and then get a long, but we just didn't get it. So it's aggressive, but if you want to take a risk, that's the place to do it. You're pretty far from the EMA, and if you did catch that, then you definitely got a runner, and you could have rode that thing all the way up. So really solid trade. All right, so then down here, this is actually my favorite trade of the day. So right here, you have all these highs. So now you're starting your count over, and you got a first entry long. It breaks this tight up channel, so you're expecting a new high on this up channel. All right, you don't have the wider channel confirmed yet, but for this up channel right here, you're expecting a new high. It turns into this little tight channel working down, but what I love about this is you have this new high. So now you have a first entry long, pull back, second entry long on this huge green candle, which is a 21 tick candle. But what I like about this trade is that this down channel, this is a new low right here. So what happens with this green candle is it ticks 1 tick below this red bar. So it ticks 1 tick down and reverses immediately. And so what that means is that if this candle closes outside of this this down channel, then the down channel has already played out and got a new low, all in one bar. But this is a mostly solid red bar. So what I did was you have to enter this on the engulfing, and that's why it's pointing here instead of on the green candle. So what you do here is you're thinking first entry long. If it breaks above this red bar, it's a second entry long, but it's an engulfing entry. So what you're doing is you're looking for these shorts to all get trapped. All these shorts were thinking that we're going lower, and they were wrong. And so what happens is when it ticks 1 tick below and starts reversing, you have your stop long order 1 tick above this red bar's wick. So right here, and then basically as it comes up, it fills you and immediately goes up and hits your order right away. This thing was like a basically 1 or 2 second trade. Best trade of the day. I love those. When they go that way and you see that trap, that's the best because you're expecting a new high on that up channel. So it ends up being a second entry engulfing. You would then even get a higher low, which is another confirmed one. Because at this point, you would have probably drawn the wider channel here. It ended up moving a little bit on me. It's supposed to be a little lower, but it moved. And so then what you get here is you could kind of look at this as two things. So from this low, it actually comes up and gives you a first entry short. And then this candle, I don't remember exactly how it broke, but it's kind of like a failed second entry short in a way. But really, this is just a higher low that engulfs this bar right here. So as this one comes down and then closes, gives you this bullish close, you could take that one because you're still expecting the new high. So it's just a higher low after a second entry long. Really good setup. It gives you this kind of tighter up channel that then breaks and makes a new high on the news right there. And then Then we're working up here. You have the wider channel confirmed on this one here. And so you end up getting into this kind of like tighter little range area. You're still making some higher highs there, but it starts to get a bit sideways in the channel. Eventually you do come down here and get a close right on the level, and then this one opens and immediately reverses and goes into this wild move. Now on this wild move, you're expecting it to fill the gap, which it does. There are a couple longs here. Sorry, I forgot to mention those. You have this one, which is a first entry, second entry long. The reason it's green is because this is kind of a doji. It does close in the upper third, so if you took that, it's probably fine, but it's not perfect. You want this bar to be a little bit more bullish than that. It kind of looks sideways. It looks a little sideways and congested and like a doji. It is two legs. Two obvious legs of correction there. It is off the low of this range, so it is reasonable, but you don't have a ton of space there, so you barely get a scalp if you take that. Then you get this one here. This one was essentially just kind of, and also this one was a triple test, because 1, 2, kind of a triple test. This one ends up being another test of that low, and it's a kind of bullish bar, a little bit more bullish than this one. Again, it's still a little bit like a doji, so not perfect, but you could be looking for that to go long, because you are above the 21 EMA. You know, it does look pretty reasonable to me to take a trade there. Just playing a range, playing a tight range rule, but it's a very tight range, so you got to be careful with that. All right, so ends up getting a couple of scalps there. It comes up, and then you get a second entry short here. The reason this is green is this bar is not quite bearish enough. I was really hoping that this would be like a really serious bearish reversal bar. It ends up not being one. It ends up just giving you it does give you a second entry short because it comes up. You get a first entry here, pullback, second entry short. It's an overshoot. So for me, I'm thinking we're really far from the EMA. We're probably going to come back. And so if it breaks below this, it's probably going to at least give you a pullback near the trend line and then probably back to this level, to the top of the range. You're expecting that failed breakout to happen because this is looking like a failed breakout, an overshoot. All of the above. It ends up being that. It ends up being the failed breakout, and it ends up reversing pretty quickly. And because it was an overshoot, it ends up overshooting the other side of the bottom of the channel. So that's what you expect on those. And that one definitely gives you a huge runner. So that's a really nice trade. Then after that, you are back into the range for a little bit. You end up rejecting out, and you get this move here, which is actually, you got kind of a double bottom there. So you could look at this as a first entry short, second entry short failure, which you're expecting a failure there. You are expecting a reversal because you're making the higher lows here and you're back above the EMA. So if it breaks above this red bar, then it's a failed second entry short and you could ride that long. It ends up just giving you a scalp. For me, I was thinking it'd probably run up and tap the level. It doesn't quite do that. It doesn't exactly run up. It just grinds up. So you do get your trade there, but not perfect. Then you're up here, you're not getting quite back into the channel. So that's an interesting thing. When you don't quite get back into the channel here, you have to start to wonder what's going on. You have a tight down channel working, so you are expecting a new low on this little channel. There is kind of an up channel working here, but you do get the new high over there. I drew this before I started the video, I think, and just as like a possible resistance area because we had the high of this. So for me, it just looks like we're kind of in a range and we're not quite getting out of it. You could probably move this back up. I moved this down right before the video. Yeah, it looks like it's actually possible that the range high might be this level right there on those closes, and this is another failed break. And we don't need this line anymore. So I didn't really see any other trades. I'm just looking to see if any of these would have worked out. I did look at this as a first entry, second entry short, but you can't take that because of the signal bar. So you're not really looking for a second entry short here. It's kind of sideways, a little rangy. So here you finally do have the new high from this. I didn't draw this channel, but basically there was like a tighter kind of channel right there. So you get the new high over here. That was kind of like a spiking channel over there. A little more advanced. This one, there is kind of a tighter down channel that's working, and you are getting a close outside here. But again, this is kind of a range. It's hard to say for sure what we're going to do here. If you drag this old level over, you can see we're bouncing off of it. So I like to keep these ranges on here because they come into play a lot. And you can see here, actually, we are setting up for a first entry long pullback. If we bounce off of here, there could be a second entry long setup. Again, it's probably not going to be the best setup just because now you're below the EMA, below the close. It's hard to say for sure. You know, we've tapped the range highs and rejected a few times, so we could be coming back down towards the midline or even towards the lows. It's kind of a range day, so you don't know for sure. You got to watch these short-term channels and see how they play out. And you even have to draw when they're doing this, because sometimes on a day like today, yeah, see it's kind of, you're getting some aggressive movement here. Sometimes on a day like today, you'll have a down channel and an up channel, and they play out at different times, so you got to be careful with these. You got to watch them, but this is just another tight range. Basically, in between this range and this range, we have a whole another one. So it's just a very serious rangy day, a little bit inconsistent with the highs and lows, so you got to be careful. But there were some really great trades today, and you can see that a lot of those were safe trades to take. So it was overall a really good day, and a lot better than yesterday. Yesterday was just such low volume. So I'm going to wrap it up here, and I'll see you tomorrow.